Hey everybody, this is John. Welcome to the free video. And we've got the last trading day of May coming up tomorrow on Friday. And then of course we head into June. And we've got all kinds of craziness happening. Let's look at a couple of earnings plays. So Costco earnings, we closed at 309 and trading 303 after hours, or 304 after hours. So you can see here it's just kind of staying within the expected move. For CRM, it's right at the expected move to the downside. So you may hear a lot of times, "Oh my God, it's down after hours." Well, the expected move in this case was $7, so it's right at that level. So nothing too extraordinary happening after hours. The real question here is what's happening with some key stocks, namely Netflix and Shopify. So if you look at Netflix has been a first mover, so this is something I always like to look at and see what's going on. It was the first one to bottom, the first one to break through back up above its 200 SMA, the first one to have all the moving average crosses. So now we got an 821 EMA cross. Now maybe this is just a short-term reaction to the reshuffling of assets, into the end of the month, but it's also a heads up that is this the start of something, bigger? And the same thing with something like Shopify. Now, Shopify certainly isn't anywhere to that extent that Netflix is, but this has obviously been a high flyer, and we've got an official downward channel in place. So is this the start of something bigger? And if it is, what could we look at here? What's going to happen? And really what it comes down to is that the S&P 500, which of course is the broadest index here, we were able to push through that 200 SMA finally, after kind of hovering under it for a while. That leaves the 786 in front. From here, do the S&Ps rally like a champ, or is it something where we're going to get a steeper kind of a pullback and kind of a reset as we go into the second half of the year? Well, for that, there's two things I look at. One is Netflix, which has been a leading stock. Also, the 10-day moving average, the put-call ratio. Keep in mind, we are exactly where we were now when this all thing started. So you get too many people too long and too complacent, and that's when markets tend to roll over pretty hard. So in this kind of a market, I'm a huge fan of hedges. So on the spiders, on something like that, you can buy out of the money puts. Because remember, if it starts to sell off, it's not going to wait for you. And you don't want to wake up and see that, oh my gosh, the markets are getting trounced, and you're 100% long and you have no hedges in place. So I don't hedge all the time, but when the 10-day moving average gets like that, I gotta hedge. Even if the hedges don't work, that's fine, because at the end of the day, my only goal as a trader, my main goal as a trader, my first goal as a trader is to preserve what I have. And then from there, I can try to grow crops, i.e. generate cash from my field, my account. I spent a couple years on a farm, so I use those analogies. All right, that's what I got. You guys have a fantastic evening, and we'll see you at the next update.